JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius and Anucauskas. Today's the 28th of February 2020. So yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a quick look at the markets, a few of the instruments, a few interesting moves that happened, of course, overnight and yesterday. So as always, guys, before we jump in, quick mentioning of our JFD, or actually not yet, but the first thing we need to do is the disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so also just a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yeah, feel free to guys to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, until it's loading up, well, you understood the message, but basically let's jump into the charts now. The first one I want to touch on here is the German DAX. Now I talked about this whole week, and of course, as you follow the news, we are seeing a huge turmoil in the market, and due to the whole coronavirus. Now, yesterday what I was talking about was saying that if we get a drop below this territory here, below the 12,368 zone, roughly around there, then the next area to consider could be around these 12,165 or 200 zone. And yep, looking at the yesterday, we managed to reach that on the cash index. So as you can see, yesterday the index closed around here, around this area, but after the US slide, I mean, it continued to drift further south. And to have a look at the cash index right now and where it is trading at the moment, well, we can see that the price is already below the psychological 12,000 zone. So basically, in other words, this is a daily chart, by the way, and probably I'm going to stick to daily charts today in this session, because, well, I mean, this the severe drops that we're seeing right now, the severe moves in the market, so probably it's better visibility here on the dailies. So you can see that this low here, the lowest point of October of last year, is around the 11,879 zone, and this is where the index is currently trading at, or should I say actually even slightly below that. So basically the index is already the cash index is already below the this 11,879 zone, which is the lowest point of October. And in a way, well, I mean, this, for now, it seems that there is no kind of indication of this one to reverse anytime soon, unless something comes out in the news. But again, for now, it's just one-way traffic, guys. That's why be very careful, and don't forget that today's Friday, and the markets might continue pushing further south. If they will decide to recover, maybe this could be something for next week. But again, guys, for now, like I said, be very careful. Like I said, the price is already balancing below this 11,879 zone. The next area of support could be seen around here near the 11,550 zone, which is around the low of the 26th of August, and the lowest point of August is here near the 11,266. But again, for now, guys, this is not looking good in general. I do understand that every day they will keep falling lower, and in a way, somebody's looking for that possible correction to the upside. But again, it's really difficult to talk about that those corrections to the upside, because, like I said, the situation is not really getting better. So yep, let's for now keep your eyes on this today. From the technical side, keep your eyes on the 11,879 zone. If the price continues to balance below this, then yep, the next area to consider could be around the 11,550, 52 zone. So somewhere around here, basically, guys. Quickly mentioning for the FTSE. Now, I looked at this one this week as well, and no recovery yet. And let me just zoom out here a little bit. Now, on the FTSE, similar story. We are sliding lower. The price is already around the 6,541 zone. So, in other words, the price is already below this level here. The lowest point of December, which is, or actually, should I say, do apologize, it's roughly around here, guys. It's basically balancing just fractionally above this level, above this lowest point of December 2018, not even 1918, guys. Now this is where we are right now, and well, I mean, this is not really looking good here for the markets, and of course, don't get me wrong, we may see a hold up around here, maybe getting a bit of a correction here maybe at some point, but for now everything's kind of leaning more towards the downside. Let's see if the today, if the index can actually fall further below this, the lowest point of December 2018, and if I'm not mistaken, actually also the lowest point of 2018 in general. So if this is gonna close today below the low of 2018, now this is not really looking good for the markets here, guys, unless something comes out positive from the whole coronavirus saga. So again, for now, it's just one-way traffic to the downside. Dow Jones Industrial Average. Now, also quick mentioning of this. Again, the markets closed yesterday heavily in the red, at around 4.4%. But after hours, the index continued to slide, and looking at the cash index right now, we are balancing near the 25,200 territory. So basically, we're even below this this area here, the low of the 15th of August in 2019. So the big question here is, can this continue drifting lower, and can we actually reach the lowest point of June 2019, and that's around the 24,680 zone. So to be honest, with the same pace that we're seeing right now, well, I mean, it's probably just a matter of time. But again, let's keep a bit of positivity in us. Let's keep an eye on this 25,340 territory, which is the low of the 15th of August. Of course, like I said, the price is currently balancing slightly below this area, but if by any chance we get a pullback here and a drift back maybe above the 25,766 territory here, which is the low of the 3rd of October, then maybe we could see a bit of correction here to the upside. But again, for now, it's very, very difficult to talk about that correction. DXY, another index, but this time it's a dollar index, and yesterday I talked about this one, and we were balancing above slightly around this 200 EMA on the 4-hour chart. But what I was saying, that if we get a nice good drop below this, and we get a nice close at least of a 4-hour candle below this 200 EMA, then yep, it could open the path towards this upside support line taken from the low of the 31st of August. December. Of last year, of course. So for now, we're targeting this line. We want to see how it performs around here, around this upside line. If it holds, we may get maybe a bit of a rebound here and then a push back towards this downside line taken from the highest point of February, and then we'll take it from there. Basically, we could see the index kind of coiling up here a little bit. So again, for now, we're targeting the downside, but only up until this upside support line taken from the low the 31st of December. Gold. Now, the markets are sliding, and gold is sliding as well. Now, again, maybe it hit the maybe it's not that bad in general. So this is where maybe a bit of gold is losing its correlation with should I say, negative correlation with gold, with the indices, and for now. From the technical side, in a way, we could see a bit of declines, especially if we see a drop below this low of this week near the 1624 territory. Now, I talked about this one yesterday, and basically if this drops below this, then the next area to consider could be around the 1612, which is the highest point of January. Now it could play the role of support, but if that fails to withhold, then yes, we could see a drift towards this upside support line taken from the low of the 12th of December. For now, we'll be very careful here and cautious, because again, gold is normally seen as a safe haven, but for now it's losing that title and continues to slide lower. And even with the dropping DXY as well, with the dropping dollar index, I mean, this is where it's becoming a little bit interesting and tricky at the same time, because the DXY is sliding, and well, basically we are seeing a bit of a strengthening in gold, a strengthening in, do apologize, not strengthening, weakening of the of gold here. So basically this is a bit confusion in the market right now, I would say, and for now, keep your eyes on this one, guys. Keep your eyes on the 1624. If we see a drop below this, then yep, we will aim for lower levels. In terms of the upside, we need to see a push back above the high of this week. We would like to see a push above the high of this week, which is around, let me just double check this actually very quickly. The high of this week, sorry, the high of this week was around here, guys, around the 1689. But in a way, if we get a push above the high of yesterday near the 1660, then yep, there could be a possibility maybe to aim for the high of this week. There we go, managed to get this one right now. So 1660, guys, that's the level for us to consider the upside. For now, it's more leaning towards the downside again, but be very careful with this, because it's a little bit contradicting each other here. Everything is. WTI oil. Now I talked about this one here, and I talked about this one this week, and what I was saying, that if we get a drop below the 49.30 zone, this would confirm a forthcoming lower low, and yep, we could start targeting lower areas. We got that, and our main target initially was around the 47.75 zone, which is the high of the 31st of December 2018. Sorry, the 2nd of January 2019. There we go, that's the right one. That's the high of this this level marks the high of that day. Now you can see that the commodity continues to slide. The next target for us is around here, around the low of the 2nd of January, the same 2nd of January, which is around the 44.37 zone. So we're keeping a close eye on that one. Don't get me wrong, if it continues to drift lower towards the lowest point of December 2018, now that's around the 42.40 zone. So again, keep your eyes on that one, but first let's keep an eye on this 44.37. That's our main target for now. In terms of the upside, well, we would like to see a push back above this territory here, the 49.30, before kind of considering slightly higher areas. Again, for now, it's kind of more leaning to the downside, so we are more bearish than bullish. AUDUSD, very quickly on this, so it continues to slide as well, but with the problem here is, and let me just click on this little magic button, and this is basically the whole history that we have here, starting from around 1975 year. So we are currently traveling towards the levels last seen in 2008. So basically, after when we had the crash here in in the beginning of 2008 here, you can see that these are the levels now the pair is drifting to. We are currently traveling towards the low of February 2009, which is roughly around the 0.6249 zone. And of course, don't get me wrong, slightly above that we do have some obstacles here, especially if we look at the daily chart as well. But this is a monthly chart, by the way, guys, so just wanted to show you where we are heading to right now, where it seems that we're heading towards the the lows of 2009, which are near the 0.6249 zone. So keep your eyes on that one, guys. Now again, this might take a while, but don't get me wrong, and the the Australian dollar is getting hit right now due to the whole China situation, because the Australian economy relies heavily on Chinese exports, and yep, that's not looking good here for now for the Australian economy as well. So yep, as we can see, Australian dollar is dropping lower. Jumping into USD CAD. Now, I talked about this one yesterday, and our target was the highest point of September 2019. We managed to easily overcome that. I mean, that's understandable as oil continues to drop lower. The Canadian dollar is weakening. So because, as we know, Canadian dollar is heavily reliant on the oil prices. So that's why for now the main kind of target for us is, of course, the upside, but don't get me wrong, we can see that the price is currently, the rate is currently balancing near this area around the 1.34, 32, 33 zone, maybe just slightly above that. But if, let's say, if it stays above this today, then yep, the next area to consider could be around these little areas around the little high of the 24th of May 2019 and the low of the inside swing low of the 29th of May 2019 as well. So again, this is going to be our next target around the 1.34, 82, 83 zone, and so let's see how this is going to play out. But again, we would like to see a nice good daily close above this 1.33, 34, 33 territory before kind of considering higher levels. In terms of the downside here, as you can see, yes, we're still balancing above this upside support line taken from the low of the 7th of January. But in a way, if we see a move back below the 1.3383 territory, then we may see maybe a bit of a correction here to the downside. For now, as I said, it's a little bit tricky here with the downside. We are currently testing the high of the 18th of June 2019. If we see the rate staying above this, then yep, a further move higher could be possible, at least towards the 1.3483 territory. USDJPY, very quickly on this. So yesterday I talked about this one in my traders tea time, and we were still hanging around this short-term upside line taken from the low of the 7th of February. But what I was saying, that if we see a drop below this, and then eventually if we see a drop below the 109.50 zone, then, well, I mean, this could lead towards further declines, where we could start aiming for the 108.26 level, which is the low of the 2nd of February. So you can see that this is right now the target. This is right now where it's heading to. Don't get me wrong, we may get maybe a bit of a correction at some point, but to be honest, we can see that the yen kind of started acting as the safe haven again. So that's why we could see this one sliding further south if the equities continue to drift south as well. With the upside, we would like to see a push back above this short-term tentative upside line, and maybe a push above the this little barrier here, the 109.86 zone, because at the same time this would place the rate back above the 200 EMA on the 4-hour chart. So some more buyers could see this as a positive thing. So that's why, guys, for now the upside for us is slightly off the table, unless it's a temporary correction. NZDJPY, similar story. I looked at this one this week as well, and let me just jump into a daily. What I was saying this week, that if we see a drop below this territory here, the 69.92, then yep, further declines are possible. Yesterday we were hanging around here near the 69.23, but it's 69.25. But what I was saying, that if this fails to withhold as well, and we see a further decline towards the 68.85, then yep, I mean, this is where it could end up being. But as you can see, this morning we already saw a strong move lower, dropping below the low of November here, the lowest point of November, which is around these 68.85, and the pair is drifting further south. It ended up testing the low of the 16th of October near the 67.84 zone, from which it kind of rebounded right now. Don't get me wrong, we for now everything's kind of still leaning towards the downside, but the ideal scenario right now for us would be if we see another strong move below the 67.84 zone, then yes, we will aim for lower levels, because again, don't get me wrong, we are quite overstretched here to the downside on one hand. So in a way, maybe a bit of correction could be possible, especially if this level here, the 67.84 territory, continues to hold. So we may see something like that. We may see a rebound and then maybe some retracement here, but that's why I'm saying that if the yen continues to be under buying interest, then, well, I mean, this could lead towards further declines. And the next area to consider, of course, is the low of October near the 66.94 territory. So keep your eyes on that one. And finally, Euro USD. So managed to break the area here, and let me just jump into a 4-hour chart. So we had a fantastic rally, but what I was saying yesterday, that if this downside line holds, we could see this one drifting back to the downside, but if it breaks it, then there is a good chance for this one to move further north. The only issue here with the upside is, of course, we need to see a nice good push above the 1.1014 zone first, because that's the more comfortable level for us, after which we could aim for higher levels. For now, you can see that yes, we did break this downside line. The rate is currently balancing, kind of oscillating around it. So we will remain a little bit on the neutral side here, because it's a little bit tricky here. It's close to this 1.1014 zone, which is the high of the 6th of February, and that's a break of which we need in order to aim for higher levels. But at the same time, it's not far still from this downside line. So if something happens today, again, something that could increase maybe dollar buying, then we could see the euro dollar drifting south again. But if it falls below the 200 EMA here on the 4-hour chart, then yes, we will aim for this upside support line taken from the low of the 20th of February, and then we'll take it from there. Because if it wants to rebound, then yep, we'll reevaluate everything again. But for now, guys, be very careful. We are very close to this 1.1014 zone. If we get a nice good strong push and we see at least a 4-hour candle close above this barrier, then yep, we will aim for the upside. For now, we did get already a decent move higher. We can see that our oscillators here on the 4-hour chart are at their tops, are above the, for example, the 70 mark here, especially the RSI. So if by any chance this crosses below this 70 mark, then, well, I mean, maybe we could see a bit of a correction here. But again, that's too early to say. First, let's wait for the fact, and then kind of react to the whole situation. Okay, guys, I really hope you found it useful. Apologies for the kind of slightly long video, but I just really wanted to cover all these instruments, because it's, let's say, not a usual situation right now in the markets. Guys, keep your eyes watching the news, keep your eyes on the whole development surrounding the coronavirus, and any kind of little positivity might spark a bit of buying back maybe in the equities. But again, still be very careful with that, because for now any kind of pullback could be seen as a temporary correction. Yeah, like I said, guys, be very careful for now. Anyway, if you want to join me later on in Traders Tea Time, 14:15 GMT, we'll have a look at the markets again, and yep, we'll see how everything has played out during today and how it might play out later during the US session. So thank you very much for watching and listening, and bye bye.